Good afternoon, this is Ben, and I'm going to talk to you about commodities today. But we are equity traders, you might say, so who cares about commodities? Well, certain commodities can tell us a lot about what's going on in the economy and across various segments of the stock market. Some of the key ones that we're looking at is crude oil, copper, lumber. There are others such as iron ore, Brent crude, other things that's important, but for the purpose of this, that's what I'm going to focus on. So the long-term future might be all electric with Elon Musk as the big overlord. But in the meantime, the world of transportation still runs on gasoline. And we have a lot of tools at our disposal to analyze the markets. And I want to talk a little bit about Dow theory. Now, the transportation and industrial segments of the economy are super important. I'm not going to go bore you with all the history dating back over 100 years. But in short, Dow theory states that if both the Dow Industrial and Dow Transportation indices are above previous major highs, the market is in a technical uptrend. And here are the charts for both of these, looking at the DIA, which is the Dow Jones Industrial, and the IYT, this is the Transportation ETF. And they're clearly above where you see that green mark that was set like over a year ago, above these levels. And if you throw in XLK, which is a tech ETF, into this space, you get a pretty good picture of what's going on as the XLK is hovering near all-time highs. Okay, so what does that have to do with commodities? Well, copper is a very important industrial metal. Okay, it's used in electrical wiring, construction, machinery, and several other applications across the economy. So it's clearly something that should be monitored. In addition to crude oil, which most of us look at, and it's still primarily used for gasoline. Who knows how it's going to be in 20 years from now, but that's how it is still. And it does have a direct impact on the transportation sector for sure. So this translates into a strong correlation between copper and industrial stocks and crude oil with transportation. And we can see this relationship graphically on these charts, where the DIA, which is the industrial ETF, has the price of copper future overlaid on top, and the same goes for the IYT that has crude. It's not a perfect correlation, but they are definitely tight at the hip. Now that that's established here, we can use this connection to firm up our macro view in addition to coming up with solid trade ideas. And we can do that by getting an inside look on how the big players in the various commodities are positioning themselves. So the Commodity Futures and Trading Commission, CFTC, publishes a weekly report, right, that states how net long or net short the various players of a particular contract are positioned. And it's split into three different main categories. So you have commercials, which are the large hedgers, such as airlines, farmers, food producers. And then you have the small speculators, retail traders. So who cares? We do care about non-commercials. Okay, so non-commercials are the large speculators like hedge funds and CTAs, otherwise known as the smart money. And these guys are experts, within their commodity. So it's usually a good idea to stay on the same, in the same direction as they are. And they tend to trade in the general direction of the prevailing trend. Now, these reports can be found on the cftc.gov website, but also on various platforms such as TradeStation. And it looks like this for crude oil. Okay, where the pink line at the bottom shows the net positioning for the large speculators. And you can see that they have been increasing their long positions versus shorts for over a month. And if you zoom in on a daily time frame, you can also see a pretty clear technical breakout in crude, which is also in line with the overall energy market. You've probably seen natural gas lately completely on fire. So there's definitely interesting things happening in this market. So additionally, crude inventories have been really low. and we had Saudi Arabia and Russia extending their supply cuts. So I'm not going to go, too deeply into what drives the supply-demand drivers for various commodities. Okay, that's really a completely different webinar. But this is more about establishing the relationship between certain raw materials and certain sectors for stock idea generating purposes. That's why we're doing all this. Okay, so what does all this have to do with the stock market? How can it help us come up with amazing high-octane trade ideas? That's kind of the whole point. Well, there are many ways to play a scenario where you are, for example, bullish on crude. The most straightforward is to buy a derivative on the commodity itself. And we can do that either by using the raw futures contracts, ETFs, leverage ETFs, pure energy stocks, or options on any of these. And another example is, let's say you are interested in long ideas in the home building space. Well, building homes is the largest user of lumber in the United States. So then why wouldn't you pay attention to what's happening in the lumber market? It can give us clues. And we can pull the Commitment of Traders report directly from the source, being the cftc.gov website, and find lumber positioning. And the report looks like this. And I'm going to walk you through it. Now, for this purpose, what we care about is how the non-commercials are positioned. Are they net long, net short? More importantly, how is that changing? Where's the wind blowing? And in this case, they are 2,000 contracts long, 1,594 short. So net long 406, which that by itself, you might think it's, a bullish sign. But what's really more important is the change here. And the net change from the previous week is an increase of short positions by 556 contracts versus only 96 for longs. So a negative net change in the tune of 460 contracts being sold. Not good. So there's a lot of economical housing data that we follow, and that clearly takes higher importance. But this type of analysis can be used for timing purposes primarily. And in this case, if I was bullish and I wanted to buy home building stocks, I would wait until this picture shifts into a positive scenario. Okay, so I know that there is kind of a bullish view on where lumber is going because that directly feeds into home building. And we can apply these principles really to any segment of the market that is commodity related. Also, on a macro level, it can give us clues as to what's going on underneath the hood of the overall economy. For example, in the past 12 months, the biggest concern has been inflation, really. Well, growth, but also inflation. Inflation has been cooling off with the Fed rate hikes, but it's still a really important key measure that the Fed is just super zoomed in on. And we can get a head start by tracking the major commodity price moves, which can tell us what's going on with inflation before the economical data is released. So again, it's all about staying ahead of the curve, folks. Where's the wind blowing, and how can we anticipate what's going to happen rather than trying to make decisions based on trailing data. So that's a wrap for this episode. Catch you later.